I think, hopefully this Giga Berlin, this factory here, can serve as an inspiration to people in Germany and throughout Europe for excitement about the future. I mean, we've got to be excited about the future. We've got to do things that make us want to live. It cannot always be about problems every day. I mean, do you want to wake up every morning and everything's just a problem? Well, what inspires you and what makes you excited about the future? There's got to be some things like that.
Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. I'm gonna give you guys a quick heads up. We've got the shades open today, and we're in the middle of a hurricane. So if you see anything crazy happening out there, don't worry about it. Everyone's safe, everything's okay. We're just in the middle of a hurricane. So hopefully we get some cool shots behind us, but other than that, we'll just get some bands here and there. A lot of rain, a lot of wind. Everything's gonna be okay. Now, for today's episode, I want to go into some of the recent developments with regards to Giga Berlin and the exciting future that we have going on right now with Tesla. Okay, I think Elon says it best, as you saw there in the intro. We need to be excited about the future. Okay, it can't always be all about problems and issues, right? Sometimes we have to have exciting things to wake up to, exciting things to look forward to, and to be ambitious about for the future. And I think Tesla gives us a very beautiful picture of what that could look like. And as a investor who is all in on Tesla, I think it's an extremely exciting point in time. You'll see in a second here, I'm going to show you some charts and some graphs, but it's a very exciting time to be at the very beginning of the exponential S curve, right? We're right at the beginning of that. And some of these charts I'm going to show you really exemplify that. We're also going to go into a very introspective article, that's a nice way of saying it, with regards to all of the other major auto players out there and where they currently are and what their plans are in the future with regards to modernizing their entire fleet from an ICE or internal combustion engine into a EV world. Okay, so we're going to see where they're at, what their plans are, and what it really means, the big scheme of things for their future, whether they realize it or not. All right, before we get into it, you guys know the drill. In order to get started, you gotta hit the like button, you gotta hit the subscribe button, you have to ring that bell in order to move forward. So with that said, I'll wait. All right, appreciate it. All right, let's go ahead and get into it. So over the past few days, Elon Musk has been in Germany, mainly in the Berlin area, and he's been visiting Giga Berlin and seeing what the progress is and what's left in order to get to completion. Now, during this entire meeting and walkthrough and visit of Giga Berlin, Elon stopped and took some questions from some reporters. So let's take a look at that real quick.
For the very impressive visit here in this Giga factory. This is the future of energy, the future of sustainability, and we thank you for this investment in Germany.
Absolutely. Well, it's a pleasure to be here. We're looking forward to making the most advanced electric cars in the world, as well as battery packs for home and utility use, and just generally helping accelerate the green revolution. So the factory right now is obviously still under construction, but once it's done, it will be beautiful. And just, we want it to be a place you look at and say, wow, I want to work there. That place is awesome. And I'd like to thank the government for the support in, getting the approvals and making progress, as you can see. We're looking forward to hopefully getting the approval to make the first cars maybe in October if we're fortunate.
So right there you hear Elon saying a lot of good things. I mean, first of all, you can just tell that he is in just such a glowing and happy mood, right? He's uplifted. I don't know if it's maybe because Grimes is there with him. I don't know if you guys, if any of you saw her, I think it was a TikTok video where she just showed inside of Giga Berlin and she was kind of dancing around, but he's just in a good mood. And I have to believe a lot of it has to do with the fact that it's almost done. Giga Berlin's almost up and operational. And this is the first time we heard Elon really talk about a timeline and setting expectations out there. And he mentioned October. Keep in mind, in October, Elon recently tweeted that on October 9th, that they're going to go ahead and open up Giga Berlin for everybody in the area and for the rest of Germany as well to come and visit. But the locals will have priority. And this will be more or less a walkthrough, and is to get the local people that are excited about what's happening within their own little town. Okay, this is going to bring so many high-paying jobs into the region, quality jobs. It's going to really revitalize the entire area. Also, the timing of this. If Giga Berlin starts production in October, think about what that means in the big scheme of things with numbers and vehicles and revenue and profit. Okay, we're going to get into this a little bit here, but let's look at one more clip before we go on and take a look at some of these charts.
I think, hopefully this Giga Berlin, this factory here, can serve as an inspiration to people in Germany and throughout Europe for excitement about the future. I mean, we've got to be excited about the future. We've got to do things that make us want to live. It cannot always be about problems every day. I mean, do you want to wake up every morning and everything's just a problem? Well, what inspires you and what makes you excited about the future? There's got to be some things like that.
How refreshing is that? What inspires you? What makes you get up in the morning excited for the future? This is something we don't talk about enough. Whether you turn on the TV and watch any news, whether you turn on your social media, whether it's just anybody out there just the whole COVID thing and the reactions to it, the good, the bad, the ugly, some are overreactions, some aren't, right? There's such a huge spectrum with all of this, but everything we seem to flood ourselves with as humans is all negative. It's all negativity. And here we have Elon saying, it can't always be about that. Sometimes we have to focus on the exciting things, right? And that's what this is. This is a very exciting moment for Elon, for Tesla, for all of us investors. And it's, honestly, it should be a very exciting time for any of you who aren't invested in Tesla yet, because this right now is a moment you can get in. It may not seem like it's early, but think about it this way. This is like getting into Tesla during Amazon 2013, 2014 time period. Just like then, people thought, oh, it's way too expensive to get in, and look at where we are in 2021. Right? Think about the housing market. People back in 2013, 2014, people back in 2015 were saying things were too expensive. Things are way overinflated. Look where we are right now in 2021. So this whole ideology, don't be a prisoner of the time. Don't be a prisoner of the moment. Okay? Don't always think about right this second, and think about the future. It's very exciting. Okay? This factory opening up in Germany will be the third continent that Tesla has a factory in. Okay? This will be the most advanced Model Ys they're building. 2/3 of the body will be created by the Giga Press. Okay, this means from an economic perspective, it means they're going to save so much money. There's going to be such greater gross margins with the result of all of this. And keep in mind, they're not going to have to transport as many vehicles from elsewhere, from the United States, out of Fremont, from China, out of Shanghai, right? They're going to have things a lot more local, which again, saves money, saves costs, which reflects in the stock price at the end of the day. So with that said, as I mentioned, I have some charts that I want to look at just to put a little bit of this into perspective and to see what can actually happen because this new factory is opening up. And also, don't forget, right around the corner, and perhaps even before Berlin, which is slated for October, is Giga Austin, which is an even bigger factory than Giga Berlin. Okay, so just keep all that in your mind while we look at these charts. Okay, let's dive in. Okay, so here's a bar chart that we have from Hypercharts. If you haven't checked it out, Hypercharts, amazing website. But this is a chart I took from there, and this is vehicles delivered for Tesla over the last, say, 3 years, 4 years, split up by quarters. And we can see, just from a high level, it starts on the bottom left with lower numbers to the far right, which has higher numbers, right? And we have this sloping exponential growth that we like to see from any company that we're invested in. Now, keep in mind that all of the growth you see pretty much up to right here of, call it Q1 of 2020, this was all just one factory. Okay, this was the California Fremont factory. That was just a old factory that Tesla had bought from Toyota, and they modified it, refurbished it in order to, fit what they wanted. Okay, it was a kind of a Frankenstein project in order to be able to create a car factory, a manufacturing facility for the Teslas, before Tesla was actually a company as it is today. So then about Q2-ish of 2020, that's when Giga Shanghai came online. Okay, this was the first factory Tesla ever built that was intentionally built and designed and thought of for Tesla vehicle production. Okay, there's a lot more efficiency they were able to get out of it because they were able to start from the ground up. Okay, they were able to make exactly what they wanted. And so you can see the rest of what you see here, all this up and to the right, all this growth is a result of a mix of Fremont and Shanghai. Okay, right now, Tesla is sitting at about a 700 ish $1 billion market capitalization value. It's at about $720 a share. Okay, now this is just with 2 factories. And keep in mind, Shanghai isn't fully ramped up yet. Okay, it's still ramping up, right? The numbers are going to grow and grow and grow from there. And also, what you see here for this Q2 2021, this does not involve the Model S and Model X really, because those just went through a whole refresh. So those are still yet to be ramped up. So what we'll see is this, in Q3, we're going to see an even bigger number here because we'll have more S and X. Shanghai will be further ramped up, right? So a lot of this is a nice tailwind for Tesla going into the end of the year. And, last point here, Q3 and Q4 tend to be the quarters where Tesla makes the most vehicles, right? I mean, look here, Q4 right here. Look over here, Q4 right here, right? And here we are, Q1, Q2. So these next 2 quarters, we should see massive numbers from Tesla. Okay, so that was just setting the stage for what I really want to talk about. We're talking about getting excited about the future. We're talking about, is it too late to invest in Tesla? The answer to the first is Tesla is what we should be excited about for the future. And the answer to the second is no, it is nowhere near too late. Okay, Giga Berlin is rumored to be able to do 1 to 1.5 million vehicles. Keep in mind, the California facility is only at about 500 to 600 max. Shanghai, they're estimating maybe 1 million. Giga Berlin, they're estimating about $1.5 million million vehicles once it's fully ramped up. Okay, that's coming on in October. Okay, so think about how much more this is going to grow. These charts are going to blow it out the water over the next year. Okay, this means that you can invest in Tesla now, right now, before it's even online. Okay, and it's very predictable. We know that these numbers are going to double. And keep in mind, not only is Giga Berlin coming online, Giga Austin, an even bigger factory than Giga Berlin, is going to be coming online possibly before Berlin does. And that one is slated, again, these are all rumors, but they're estimating 2 million vehicles a year from that facility on its own. So right now we have what you see here, and the current market cap and price you see of Tesla, all that is between 2 factories that are only making about $1 million a year. And I'm telling you that we have 2 new factories about to come on in October, November timeline that together will be able to do about 2.5 million once everything is ramped up. Okay, those are huge numbers. And those are things that people aren't seeing. And that's coming really soon. And where are we going to really result in this and where are we going to see the benefit? It's going to be in the revenue. It's going to be in the margins. It's going to be on the balance sheet. And more importantly, it's going to be in the stock price. Okay, this will have a direct result in the stock price. You better believe it. And what's going to be even crazier is when people start seeing the margins, right? How efficient Tesla can be with making each one of these vehicles. All right, they make so much more money per vehicle than any other auto manufacturer out there. It is insane. It's not even close. Okay, so with all that said, keep in mind, I'm just an engineer. I am not an accountant. I'm not a financial advisor. I'm just a random engineer who geeks out on Tesla because Teslas are just an amazing engineering feat of brilliance is what they are. Okay, so just take all that with a grain of salt, right? And use that for your own decisions when you invest and do your own homework as always, right? Don't be a sheep, right? Be a lion, go out there, make your own decisions, do your own homework, and think for yourself, all right? Don't get brainwashed. Now, with that said, again, this chart here is just the very beginning, okay? This is essentially just at a run rate, if we take Q2 right now, this is about 800,000 vehicles a year. Okay, this will probably be doubling over the next year. So this is an exciting future to think about. Now, there's another chart I want to take a look at, so let's go ahead and switch over to that one. Okay, so here's another bar graph, but this one's a little different. This has to do with net income for Tesla. Now, as you can see, we have a very similar trend again, right? Here we have in the early years of 2017, 2018, and even 2019, everything was essentially in the negative, right? In the red. And this again was because with growth companies, what we tend to see is they take all their profits and they dump it right back into the company, right? They would rather invest in future growth than taking those investments now. Okay, and that's what you see with all these companies, with companies like Apple, with companies like Amazon, with Tesla, right? This is the way you want to move forward, right? Forgo profits now and have short-term pain for long-term gains. That's the name of the game. And what we can see here is that Tesla is just now at the very early innings of starting to make money, okay? You can see here, this is the most recent quarter, they were at about $1.1 billion of net income. All right, this is just starting. So for those of you who think, oh, I've missed it out, Tesla is way too expensive now for me, again, I urge you, stock price is not everything, okay? Stock price is not a actual meaningful determination of whether or not a stock is expensive or not. All right, you have to understand what makes up a stock price. You have to look at the price compared to the amount of outstanding shares that exist. Now, I know a lot of people are going to sit there and tell you, oh, if you add up all these other auto companies, Tesla is more expensive than all of them combined. Yes, that is true. Is it warranted though? It is. Why? Because as I've explained many times, Tesla is not just an automotive company. They're an automotive company. They're a AI company, they're a software company, they own all of the gas stations, they create the fuel for the vehicles, right? The electricity, all their power generation, they're an electric grid company, right? They do so much, they're a solar company, it goes on. They are all of these companies wrapped up in one, and that's what we see here in this value, okay? Now, with that said, they're at 1.1 billion net income right now. This is, and this looks like they've been, profitable for a while, but another way of looking at this is if you take out any regulatory credits that they get, so in other words, they sell credit to their competitors, the Volkswagens, the BMWs, the Fords, the GMs of the world, Tesla will sell them regulatory credits because if they don't have X amount of vehicles that they sell that are part of, this green and fuel economy world that we're in, then those companies get a huge hit and a penalty that they have to pay. So in exchange, Tesla will sell some credits they have to them, and they'll take those as profit. It's a funny thing, right? Tesla's biggest competitors, supposedly competitors, are giving Tesla money to fund their growth. But up until this recent quarter, everybody, all the naysayers, all of the short side sellers would say that Tesla has not yet been profitable without those regulatory credits until this last quarter. So another way of looking at this is that this, in the most pessimistic conservative way, this was the first quarter ever that Tesla was truly profitable. And it wasn't by little, it was by a landslide. So think about it that way. Investing in Tesla right now means you're investing in them right as they're becoming profitable. Now, do you really think in 10 years from now that they're not going to be making at least 10 times what you see here after the first quarter that they're profitable? This is an opportunity. Don't miss out on this, okay? Again, do your own homework, do your own research, but, run with this. Take a look at this. Go deeper into it. Check out their revenue statements. Okay, so anyways, so this is their net income. And again, this is with just these two factories. Imagine what happens once they open up Austin and Berlin. What's going to happen? Keep in mind, these factories are going to be even more efficient at making these vehicles. They're going to be making the Model Y, 2/3 of it in one piece. 2/3, okay? They're not going to have to waste money on getting vehicles from point A to point B, right? Because they're going to be local to the economy, right? Giga Berlin is going to be there. It's going to be in Germany, which is in the EU, and providing that entire market. And keep in mind, Tesla right now has zero demand issue. Okay, if there's anything that you see with Tesla, the biggest complaints out there is that it's such a long wait to get their vehicles. And meanwhile, Tesla is about to open up over 100% capacity. So what does that mean? That means that they get to, lock in all of those buyers and go ahead and get those vehicles out there. So this is a very important time in our history. We're going to look back at this day, right? We're going to look back and right before these factories open up and thinking, man, I should have bought then. This was so obvious. Okay, just like a lot of us did with Amazon back in the day. When everybody was saying, oh, they're just a book company. Oh, their valuation's way too high. You could add up all the books in the world and they wouldn't even amount to what Amazon's valuation is. But be honest, the rest of us, we were buying stuff off Amazon. We knew that that's not all Amazon was, right? That's the short-sightedness. Don't get stuck in that, okay? I'm sure there are many companies you wish you could have invested in where you felt that way, where you look back and you're like, oh my goodness, this was so obvious. Apple, Netflix, Disney when they came out with Disney Plus, right? I mean, there's so many of them. Don't become a victim of the moment. Okay, one more chart I want to look at, and then we're going to get into some interesting articles. So what we see here is a line chart with miles between accidents, and I'll explain this chart a little bit. If we look at the very top, we can see up here, we have the yellow indicates United States, the blue indicates Teslas with no autopilot. We can see the green with Tesla in active safety mode, and then we can see the red is Tesla with autopilot. Okay, now keep in mind, none of this is full self-driving, all right? Has nothing to do with full self-driving. This is just autopilot and down the line. Okay, these are things that you can have today. And so if we start with the yellow, right, this is the United States. And what this is saying is how many miles are driven by the average person in the United States between accidents. So if we look here, right, for the United States, it's just under 500,000 miles. So that means that on average for every other vehicle, 500,000 miles are driven before there's an accident. Okay, now from a high level view, and if you're not looking at this chart, sounds like, oh, well, that's a lot of miles before an accident. That's not too bad. But then once you start to take in the data from Tesla, that's when things really start to open up your eyes. Now, let's look up here first. The blue is Tesla's just in general with no autopilot or anything, just Tesla's period, okay? Now, with just Teslas, they are at about 1.2 million miles before an accident happens. 1.2 million. That's over double the amount of miles driven before an accident compared to the United States as a whole. That's drastic. That's very, very drastic. Now, obviously, you can see here it gets up to about, call it 1.8 million, and down here it goes about 1 million. So 1.5, I think, is a good average for that. So 1.5 million, just Tesla alone, without anything else, just a Tesla driving compared to any other vehicle. So that's already a doubling. Now we're going to look at Tesla with active safety. Now that gets even better, right? Here we're looking about anywhere from 1.6 to about 2.7 million miles before an accident. And that's with active safety. So the majority of vehicles in the United States, just under 500,000 miles, there's going to be an accident. Tesla with active safety, anywhere from 1.6 to 2.6 million miles before an accident. That's drastic, but we're not done yet. Now we look at Tesla Autopilot. With Tesla Autopilot, it gets up to about 4.6, maybe that's 4.7 million miles that have to be driven before there's an accident. And that's with Tesla Autopilot. Okay, it is very clear. The data doesn't lie. This isn't like something you cherry pick. This is the amount of miles driven before there's an accident. Okay, and what this shows us is that not owning a Tesla is a danger to your life. Especially for people who are under 50 years old, the number one way that people under 50 tend to die is through vehicle accidents. So by owning a Tesla, you ensure, or not ensure, but you raise the probability of you not dying on the road. Okay, this is drastic. You know, this is the kind of data that I'm so happy Tesla is getting and acquiring, because when it comes to deploying full self-driving, it will be a sin to not allow it for everybody to use it. Okay, it would be criminal at that point, to quote Sandy Munro, right? And that's because it's this much safer, right? From an accident every 500,000 miles to an accident only every almost 5 million miles, like that's a no-brainer. Okay, that's saving lives is what you're doing at that point. And those are real things we can do today. All right, now this isn't, me trying to jump on a Tesla bandwagon or preach Tesla's the best or anything. But all I'm saying is, if anybody's out there looking for a new car now and you can afford it, and especially new families out there, or if you're about to have a child or anything, this is something you really need to think about. Okay, this is your family's safety on the line here. Now, I might be a hypocrite because I don't have a Tesla at the moment. We are on a reservation for a Cybertruck, right? But again, we barely drive. We live in downtown here in St. Pete, Florida. We walk everywhere. If we drive somewhere, it's maybe a mile or two away. So we're not exactly the most heavy users of vehicles as it is. We like to walk, we bike, we scooter. We use ourselves as modes of transportation. But we've already talked about it. When we have a child, it's not even a question. We will have a Tesla. There's no question about it. It'd be idiotic for us to risk it for what? For a few extra $1,000 when we can afford that? It would make no sense. So again, these numbers, I think, go back to what Elon was talking about. A future to be excited about. A future where you can drive on the highway and not have to see an accident, every 2 miles. I don't know about you guys, but if I go over the bridge to where I live, by the time I go over and come back, odds are I see an accident. We just got back from Costa Rica not too long ago, and right in front of us, there was an accident. We had to pull over, help the young lady out of her car. Another car just clipped her and ran off. And every day, when we drive around, I see another moron, another idiot sitting there trying to cut in front of us, and it's just risking another accident when there's no need. Every single day I see this. And I don't know if I'm just getting older, and so I'm becoming more of a grumpy old man or what, but it's like drivers are getting worse, and they're getting more reckless and more dangerous without a care for anyone else out there. So I think a future where we see less accidents, where people are safer, where we can ensure that something so primitive as driving isn't what's adding to the death toll for people. I think that's a future worth being excited about. And with full self-driving, which I think will come out by the end of the year, I think we are on the cusp of a whole revolutionary change of what the world can look like. All right, so let's move on. I want to look at a couple of very interesting articles now. Obviously, they have to do with Tesla, but let's just go ahead and dive into them.
Today, later on today, he's going to be addressing the UAW and the automakers here in North America and saying that the 50% crossover point has to be in 2030. Now, I said that in 2019, and I said it again in 2020. And then in 2021, I said, I think I'm going to have to move it up. It's going to have to be 2028. I'm going to tell you right now, boys and girls, 2028 is going to have to be the correct number. Otherwise, there won't be an OEM in North America because the rest of the world is moving much, much faster than we are here.
Okay, so that was Sandy Munro, and you heard what his take was for where we need to be for OEMs, right? The Fords, the GMs, the Volkswagens of the world, where they need to be by at the latest 2028 in order to not get left behind by the newcomers, the Teslas and the Chinese companies of the world. Okay, so let's take a look at this article from MarketWatch and let's see where everyone stacks up. So here we see the title, Chasing Tesla. Here are the current electric vehicle plans for every major car maker. So let's see where they stand, what their plan is. So the beginning here is just talking about Joe Biden and the goal for 2030. But let's just jump down here to Audi. So Audi, a brand known for its luxury cars and owned by Germany's Volkswagen, has promised to have battery electric vehicles comprise of 35% of its sales by 2035. By that time, Audi buyers will choose from about 20 EV models. So for Audi, I think this is excellent, actually. By 2025, 35%. The only two things that I know that this article isn't going into depth about is that whenever they talk about EV models, they're also talking about hybrid models. So in other words, a vehicle won't be fully EV, right, or electric, but it'll also still have a internal combustion engine, right? So the problem with that is that requires to have two different power trains, and in reality, you're only getting about 20, maybe 30 miles out of that battery. So it's not very efficient, but the reason we'll start seeing a lot of these OEMs trend that way is because the fundamental bottleneck when it comes to electric vehicles are the batteries. Okay, now for everyone besides Tesla, this is an issue. And the reason it's not an issue for Tesla is because one, Tesla has a whole bunch of their own factories, either already built or being built. And two, they already secured contracts with all of the biggest battery manufacturers years ago. All right, so they don't have this bottleneck of an issue as everybody else does. But what this means is, with all these new tax credits coming out, mainly from Joe Biden in the United States, it could make a lot of sense for all these OEM companies to go towards the hybrid model versus fully electric vehicles. And the reason for that is because if you have, imagine if I told you that you have, $10, and if for every $10 you spend, I'll give you another 10. Or I told you, even if you spent $2, I'll still give you $10, right? And you said, okay, well, it makes more sense to split my $10 up into 5 sets of $2, and I'll get 10 for each of those. And at first that might make sense if that was in perpetuity, or in other words, forever going on. But there will be a deadline for that, right? Eventually, all that money I have to give you will be spent. And that's how this works. Maybe that's not the best analogy, but that's how this is going to work with the EV manufacturer, or the OEM manufacturers as well. They'll go ahead and make these hybrid models because they'll be able to put less batteries in there. And so they'll be able to make more vehicles that qualify for these credits. And so they'll be able to have this short-term benefit. But in the long term, it's going to hurt them because other companies are going to be fully electric and people aren't going to want to buy these hybrid vehicles. It won't make sense. Okay, I think we are at the precipice where people say, hey, my next car has to be an EV. Okay, everybody I talk to now is looking at getting an EV. And this whole idea of a hybrid, I'll tell you right now, my neighbor bought a hybrid BMW, and it wasn't until maybe 3 weeks into it where they wish that they would have gone all electric. Okay, so this is what we're seeing, okay? So the whole idea of going hybrid really just doesn't make any sense. And if we go back to this for Audi, the whole idea of having 20 EV models, this seems excessive to me, okay? This is not efficient because that means you have to have, 20 different designs worth of spare parts, 20 different designs, 20 different manufacturing lines, okay? Rather than doing it with the approach of Tesla of having one automobile per segment and making sure that that's what you want, right? Making it, very well done and a solution that is popular across the board. They have a sedan, they have a hatchback, they will have a hatchback, they have a crossover, they have more of an SUV style with the Model X, they have a luxury sedan, they have a roadster, they're coming out with a truck, right? So, and those are the only models within those segments. Having 20 different models is a kind of archaic and backwards thinking way of building vehicles. It's very reminiscent of just the internal combustion engine era, but we're moving away from that. Okay, we're more so in the era of fewer options from vehicle makers, and that really being the path forward for efficiency and for the ability to create higher margins with every vehicle sold. Okay, enough on Audi. Let's move on. All right, BMW. So a luxury car maker, again from Germany, was among the first EV innovators. It launched its i3 compact EV 8 years ago. Yeah, we see how well that's done. Then as one of the few serious competitors to Tesla Inc.'s vehicle. Yeah, right. BMW's EV pipeline has slowed, but the automaker has promised that 25% of its European sales will be all electric and hybrid vehicles this year. See what I'm saying? See how they just subtly throw in the hybrid in there? And that all sales of its mini brand will be battery electric by 2030. It expects to launch more than 10 battery EV models in the next couple of years. Again, I think this is a mistake, going with mass quantity of vehicles over quality. Okay, this is very reminiscent of what we saw in the cell phone market, right? Where you had all these different types of phones, but really aesthetically, they all kind of condensed and consolidated into one utilitarian form factor that really made the most sense. Let's look at Daimler or Mercedes-Benz, right? Same company essentially. So Mercedes-Benz, owned by Daimler, expects that between 15 to 25% of its sales will be comprised of EVs by 2025. By 2030, the percentage is expected to grow by 50%, or grow to 50%. Again, this is something else. Like, I mean, we see all this. Nobody is planning on being above 50% by the end of 2030. Meanwhile, where do you think Tesla's going to be? Tesla's already at 100%, and they are growing so quickly. So why is it that these other companies are lagging behind? Why is it taking them so long to get there? Well, one, they don't want to have the Osborne effect. The Osborne effect is where you essentially cannibalize your own sales and your own, profit engine, no pun intended, in order to do something else. And so for all these companies to go ahead and transition over to battery electric vehicles, which, by the way, they still don't make with a profit on, right? They're still trying to figure that out, right? Because guess what? It turns out that producing electric vehicles isn't the same as producing ICE vehicles, right? It's a whole different ball game, right? It's apples and oranges, whereas before people thought it was more of like an orange and tangerine, right? It's not as similar as people thought it was. And so it's very hard. And at the same time, they have to be careful not to cannibalize what makes them money. Okay, so it's this very interesting chicken and egg thing that's happening with all these automakers. So again, this, in my opinion, and as Sandy Monroe said, is way too late. They need to move faster. Ford has said, notice this is the first one, it doesn't say luxury car maker. Ford Motor has said that 40% of its global sales by 2030 will be sales of EVs. Ford is aiming to have dozens of electrified models by 2022, the year that will also mark the debut of its much-awaited all-electric F-150 Lightning pickup truck. Ford is the one that I would, if anything, say might go bankrupt. They have the most debt out of any of the OEMs in the United States, and they also make the least amount of profit per vehicle out of any of the other auto manufacturers in the US. On top of that, the F-150 is their main moneymaker. I mean, that's their profit engine. It's the F-150. And now they're going to be introducing the Lightning. Now, they're in a pickle, okay? And so they're doing the right thing by trying to go to all electric with the Ford F-150. Okay, that is the right thing to do. But the problem is they are so reliant on F-150s, the ICE version of F-150s, that if the F-150 Lightning really catches on popularity, they're not going to be making the same profit as they did with the internal combustion engine. They won't. They're not there. And not to mention, every spec for the F-150, like the creme de la creme, the completely, balls to the wall version, right? The pimped out one, if you will, right? The one with all the luxury possible, with the best stats, is still about $20,000 to $30,000 more expensive than the Cybertruck, with all of the Cybertruck being specced out. And not only is it more expensive, it's not even close to having the same stats. There's not a single metric that even compares to the Cybertruck. Now, some people love the aesthetic of the F-150. I get it. It's classic. It's iconic. I get it. But at the end of the day, it's not going to be something that I would rather spend $20,000 to $30,000 on, especially with less performance, less range, less torque, less ability to haul. Like, why would I choose that? And then we haven't even talked about, the whole network, right? How are they going to charge? They don't have the Tesla network, which is one of the best things about Tesla, is that anywhere you go, you just plug in and it just works, right? All these other charging stations, they suck. That's the only way to say it. They suck. Okay? That's why the entire world is trying to get Tesla to open up their supercharging stations for everyone, right? Because they're so much better. All right. So honestly, I feel bad for Ford. And this is coming from a Mustang fan. Not Mach-E. Okay? Again, I've said many times, it's the ugliest vehicle I've ever seen. It is not a Mustang, and it should never be considered a Mustang, and Ford should retract that 100%. I'm not saying you can't have the Mustang or you can't have the Mach-E as a vehicle. All I'm saying is don't call it a Mustang. It's not a Mustang. And this is from a former Mustang owner, okay? Up until a couple months ago, I owned a Mustang, right? It was the first and only car I've ever actually owned. And I love that thing. I worked on it so much. It was my baby. But when I look at the Mustang Mach-E, I don't know what I'm looking at. Mustangs don't have 4 doors. Mustangs don't look like that. I'm sorry. It's just embarrassing. Okay. Oh, there's that thing, right? Yeah. Who thought that was attractive? Who thought that this is what a Mustang should look like? You know what's something else? I know I'm ranting here at this point, but have you noticed this light bar, this plastic looking light bar on the F-150 Lightning? And then if you look over here, you can see like the grill here for the Mach-E. What is the obsession with Ford all of a sudden putting mustaches on their cars? That's what this looks like to me. This looks like a stupid light mustache. And if I look over here on the Mach-E, this looks like, I don't know, a French version of a mustache. I don't know. I don't know what I'm looking at here. But all of a sudden they're putting mustaches on all of their vehicles. I don't know. All right, so GM. So GM surprised Wall Street in January by saying it aims to phase out all of its internal combustion engine vehicles by 2035 and only sell zero-emission vehicles by then. The automaker also promises to be carbon neutral by 2040. GM has said that it will offer 30 all-electric models globally by mid-decade, and that 40% of the company's U.S. models will be battery electric vehicles by the end of 2025. Its Hummer Electric is expected for next year, with production starting this fall. So again, kudos to GM for trying, right? I get it. You can't cannibalize your profit engine. You need to make money. But here's the problem. Again, 30 all-electric by mid-decade. 30. Why are all these auto manufacturers so obsessed with having so many different models? Like, I don't understand this. Like, you don't need that many models. Okay, this is excessive. It's just not a good idea. Okay, and on top of that, if we look here, they're leading off with the Hummer. Like, who said? I want to know who, in what meeting did people sit there and say, "Hey, you know what? You know the Hummer, that gas guzzling beast of a car, and you know the F-150, that other gas guzzling beast of a car, the ones that are probably catered towards people who would be the last to transition over to electric battery vehicles. You know those vehicles with that demographic? Let's start with those. Because those people, yeah, they're the ones that are going to jump on this green renewable energy revolution first. Who thought that? Who in their right mind was thinking that would be a good idea? Right? I mean, meanwhile, you look at a company like Tesla, their approach was, hey, let's start off with a very expensive roadster to sell to rich people in Hollywood who are obsessed with green energy and renewable energy. Right? That makes a little more sense. That's why we see people like Leonardo DiCaprio driving one of the original Teslas. Like, because that was, thought to aim towards the demographic that would actually buy these. Hummer, F-150? Look, I'm not saying people aren't going to buy them. I'm sure people will buy them. All I'm saying is you're not really going to penetrate into the market that you think you're going to as strongly as you think you will. But that's just my 2 cents. Again, not an analyst. This is any investment advice. I'm just an engineer who has 2 eyes and something between his head and just making some observations. I mean, we saw how well the Mach-E is selling, right? All right, let's move on. Honda, the Japanese maker, which owns the namesake Honda brand and also the luxury car brand Acura, is projected to derive 40% of its sales from EVs and fuel cell electric cars by 2030. In April 2020, Honda and GM announced a partnership to develop Honda Electric. So this is, you'll see a lot more of this, these partnerships, okay? I don't think all these companies are going to go away, all right? What I see happening is they're going to consolidate down into smaller companies. And I think that's going to be how they survive. But again, 40%, of sales, EV fuel cells by 2030, 40%, so 60% will still be internal combustion engines. That's too late. It just is. I mean, again, don't take my word for it. You heard Sandy Monroe. It's going to be too late. Again, here, Hyundai, 40% of its Kia and Hyundai brand sales, EV fuel electric, by 2025. This is definitely a lot more aggressive than what we saw from Honda up here, right? They were 40% by 2030. Hyundai is saying 40% by 2025 for the Kia brands. But again, that's not aggressive enough. And on top of that, again here, 30 electric passenger, 30. Why are they so obsessed with having so many different types of vehicles, right? It makes no sense. Look at the iPhone. How many different versions of the iPhone are there? There's not many. You got the Pro, you have, actually I don't even know what they all are anymore, but you have the Pro, you have a normal size one, and then you have a small one. That's it, right? You have different colors, sure. You have different storage mounts, sure. It's no different than Tesla. They have different colors. They have different battery ranges, but they don't have 30 different models. That's insane. There's no thought of scale here. All right, Mazda, 5% of its vehicle battery electric by 2030. That's embarrassing, not even worth commenting on. Nissan, all right, let's see where Nissan is. Was among the first automakers to offer an all-electric vehicle, and its Nissan Leaf for years was one of the few options available for those without a deep pocket needed for Tesla. Nissan plans to offer 20 EV models in China by next year. And for the US, the company recently said it plans that more than 40% of its US vehicles sales by 2030 will be fully electric. Again, 40% by 2030. Too late. Too late. Nowhere near time. Porsche. The car maker was almost a synonym of sports cars, is aiming to have half of its sales to be EV vehicles by 2025. Let me throw a caveat in here. The CEO of Porsche said that the 911 will not become an EV this decade, saying that it's not possible with the centerline engine. Okay, I don't have the tweet right now, but Elon actually responded to that tweet from Porsche's CEO with nothing but exclamation marks. Okay, this is ridiculous. The thought that we may never have another 911 because Porsche can't figure out how to balance it with a battery pack, this is idiotic. Okay, Porsche, 911 is iconic. It is not a car we should be without. Okay, so you got to figure this out. That car is Porsche. Without the 911, there is no Porsche. All right, Stellantis. So Stellantis is like a conglomeration of like Chrysler and Dodge, Ram, and all those, right? A early kind of consolidation of vehicle car companies. So the global automaker formed earlier this year through the merger of Fiat Chrysler Automobiles and France's PSA Group said in July it was investing $35 billion in EVs and adjacent technologies through 2025. By that year, Stellantis is expected to derive 31% of its U.S. sales and 38% of its European sales from EVs percentages that are seen growing to 35 of U.S. sales, 70 in Europe by 2030. Again, too little, too late. Subaru, 40 by 2030. Toyota, again, embarrassing. We see here 15 battery EV models by 2025. But I don't know. All this is sad. Volkswagen is definitely being a little more aggressive. The car maker is expected to derive 70% of its European sales from EVs and 50% of US sales from EVs by 2030. So from the European side, this looks very promising. From the US side, it doesn't. Okay, it makes me think Volkswagen might shrink a lot as a company if they're only planning on doing that within Europe. And even then, by 2030, they should be at 100% fully EV, not 70%. Okay, so they're going to lose out in the US market to Tesla and potentially some other Chinese companies that aren't even created yet or are just now coming up if they don't raise their goals here. 50% in the US is not going to cut it. Okay, so we're going to leave it there for today. I hope you guys enjoyed this. It was kind of fun to go through and kind of see where everyone was at. It kind of aligned really well with Sandy Monroe's video and talking about the state of where all these vehicles are at, all these manufacturers are at right now in comparison to Tesla. If there's one thing you should have taken away from going through this, is that when they say the competition is coming, it's nowhere near. We are in 2021, and the most aggressive of all of these are vehicle companies saying that 50% by 2025. And that's, I think only 2 of them said that, and that was the most aggressive. And those were 2 very small companies who said that. Okay, they're all aiming to be about 40 to 50% by 2030. Tesla has been fully electric this entire time. Tesla is about to do more than double their ability to produce vehicles by October. People, it's happening. There's no way about it. And you can jump on and be along for the ride as we are, all in on Tesla, right? That's the theme of this channel, investing against the grain, right? It is against the grain to go all into a company. It is against the grain to go all in into a company like Tesla, right? But the way I see it, this is nothing more than 2009 Apple. This is nothing more than 2013 Amazon. And right now, right, in about 10 years from now, you're gonna be thinking to yourself, man, if I could have just gotten into Tesla in 2021, when they had their first real quarter of profitability, it was so obvious. All the commercials, all the companies trying to get there, right? And we're not even talking about full self-driving yet. But for that, keep an eye out for our next video. Hopefully around Wednesday, there'll be enough videos out there for FSD 9.2 beta so that I can make a video. But I want to make sure that there's enough videos out there to make it really worthwhile for all of you. I want to, a lot of people are just now starting to upload their YouTube videos. So let me do the work for you guys. By latest Friday, you'll have that video. But let me take the time. I'll go in, I'll find all these videos, I'll consolidate them, I'll make it very efficient for you so that you can see all the progress without having to go dig through, all these different videos. And a lot of this honestly wasted time, because the majority of the videos when you watch them now, there's just no engagement, no interactions, right? You're just sitting there watching someone drive and it's just doing everything. It's maybe 1 or 2% of the time where something interesting happens. So, that's why I like providing this for you guys, right? Getting all these different YouTubers and taking all of those videos and getting just the interesting stuff down, distilling it so that you can see where things stand. All right, enough of my ranting. If you made it to the end, I really appreciate you guys. This channel is growing a lot faster than what we could have even imagined. And, it's exciting. It's nice to be able to do this for all of you. It's something I enjoy, and it's not just me. Right behind the camera is my beautiful fiance. She's the one that kind of gets everything going. She makes all the amazing thumbnails, and honestly, none of this is possible without her. So if you want to give her a special thank you, do her a favor, hit the like button, hit the subscribe button. Don't forget to ring that bell, and until then, I'll see you guys next time.